Expenses are what fills those buckets, what we call budget items. Think of expenses as the actual purchases you make that utilize some of the funds allocated to a bucket. Now, expense management may sound routine and even mundane, but this is where the magic happens. By associating an expense with a budget item that is associated with an OKR that has an equivalent financial value in Revup, now you can see how truly every expense investment is tied to business value, return, and in real time, instead of being dependent upon sales cycle duration, you'll see the true and complete ROI of your marketing investment. So here's how to create an expense. Click New and select either one-time or monthly expense. A one-time expense is one that has one transaction or expense line item, as opposed to a monthly recurring subscription. But even with a one-time expense, you can add additional line items later if you need to. A great example of a one-time expense is a FedEx shipment to a trade show. Enter the name of the expense, trade show shipments, name the payee, select the related budget item, and enter the amount. Now we'll also choose the status. Status, we have three of them. Planned means this is a future expense without any firm commitment. Committed implies that this is a future expense and there is a contractual obligation. And closed means this money has been spent and paid for. I'm going to select closed for this expense. Choose the date. Now for accrual-based accounting teams, what's most important is you choose the month in which the expense was used. Set an owner of this expense. And you can also set up and choose your own GL codes or enter a purchase order number. These things may make it easier to reconcile with accounting later. Click Save. Scroll down and you'll see our new one-time expense with a single expense line item. If we look at this expense here, we can see an example of a monthly expense that contains multiple line items for comparison.